Well, thanks for tuning into India Market Close and pull up the markets for you at all-time highs. It's not something that you ask every day and you get it, but today we certainly have it, and yet again led by the banks. That's the beauty of trade today. We are talking about this, that an M&M won't do the trick. It has to be bank-led, and banks are doing the trick yet again. HDFC Bank is participating, some of the other banks are participating, and that is what has led to this move in the session today. Some seriously strong move. I mean, HDFC Bank, if you look at the intraday chart, it will tell you a story which is slightly different than what this 0.5% move is saying. But also get the mid caps and the small cap indices on your screen and just show what's happening at that end of the spectrum, because while the large caps are doing what they are doing, the mid cap and the small cap indices 0.82% stronger than yesterday for the mid cap index, and for the small cap index 0.5%, so almost in line with what the Nifty is at least doing. Bring up the heat map and let's show you what are the greens and what are the reds. Remember, we started off with a lot of green and it stayed that way for a better part of the day. Not too many losers. TechM today, there's a City note which has gone out and said that there's too much exuberance. Maybe that is pulling the stock down a bit. A little bit of pullback for Tata Steel. HCL Tech continues to grumble from yesterday, but look at the gainers. A really strong set of stocks. Mahindra Mahindra up 5%, Power Grid up 3%, Indus Ind is up 3% as well. So today it's Indus Ind, to an extent Axis Bank, HDFC Bank contributing to that kind of up move that we're seeing. Not that ICICI Bank is far behind. And between all of that, Shriram Finance in news for some reasons. Power Grid up about 3.5%. Autos ahead of the monthly sales data, and arguably in some cases like M&M, the results tomorrow are kind of standing out. We'll talk about Mahindra Mahindra in great detail with two of our colleagues as well. But if large caps are doing this, Harsh, quite unlike yesterday, mid caps and small caps are participating with equal gusto. Harsh?
Well, yes, thanks for that, Niraj, for breaking that down for us. Welcome, everyone. I have with us, or have with all of us, Aditya Agarwala, who's the head of research at Investments and Invest4You EDU. Welcome firstly, Aditya. Good afternoon. Quickly on to where you're looking at both the Nifty as well as the Nifty Bank. As Niraj very correctly suggested, it's the Nifty Bank which is pulling up, or rather the banking counters which are pulling up the Nifty higher. What's the kind of what are the kind of levels you're looking at, one, and whether this rally that we've seen today, or rally of sorts, is sustainable?
Afternoon, Ash. Good afternoon to Niraj as well. Thanks for the show. It's a surprise rally, I would like to put it that way, both on the Nifty and the Bank Nifty, though there was a pullback which was expected. But this kind of a massive back-to-back rally today, I guess, is the 7th day when we are seeing this kind of an up move, barring just one day of downtake. It's been a strong rally. Having said that, what is surprising, Harsh, is if you take a look at the way the VIX has also been moving for the last two trading sessions, we are seeing a 17 to 18% jump in the VIX as well. Today 6%, yesterday 12%. So this is something which is also telling that the market participants were also not expecting this kind of a bounce back in the markets, a sharp one. A lot of call unwinding would have happened, I'm sure. So there's a spike in the premium as well. So this tells that the exuberance which we are seeing for the past couple of trading sessions could likely continue in the coming week as well, or maybe this week as well, this being a truncated week, tomorrow being a holiday. I guess on the Nifty, 23,000 is something which everybody will be eyeing on, and that's a major hurdle for the market as well. I think gradually we will see index scaling closer to about those levels of 23,000. And on the Bank Nifty, 50,000 is a major hurdle. It's almost there. We've seen a massive outperformance in trade today as well. So 50,000 is something that one needs to closely keep an eye on. If 50,000 is not taken out, there could be some kind of profit booking which we can see in the banking stocks. But there are a whole host of pockets, Harsh, which are continuing to outperform. And I believe within the banking space as well, we haven't seen the outperformance from an HDFC bank yet. And there are a lot of small banks as well, which have now started to participate. I think you will see a similar kind of an outperformance in the coming trading sessions as well. So overall, I think markets are placed well. Just that you have to tread with cautious now, because markets have rallied significantly in the past two trading sessions, and we are approaching those resistances as well. So you have to take more of stock specific and sector specific calls now rather than taking an index call overall.
Understood. Stock specific, sector specific. Before I come to your picks, Aditya, could you talk to us a little bit about the Nifty Auto and its levels as well? Because what a strong kind of an up move we've seen today on the Nifty Auto, right?
Oh, absolutely. And then this has been a very selective move as well, Harsh. If you take a look at passenger vehicle companies, from them only Tata in fact, Mahindra Mahindra has outperformed. Tata Motors and Maruti continues to languish a bit. It's only the M&M which has seen this kind of a sharp up move from the passenger vehicle. It's the commercial vehicle stocks which are actually seeing the maximum jump up. Look at the way Ashok Leyland has moved in the past few trading sessions, and Eicher Motors continuously shows outperformance. So I think, and two-wheelers as well, you see a TVS Motor and a Bajaj Auto, they continue to outperform. So it's more of a handful of stocks which are participating in the rally in autos, and I believe that will continue to happen going ahead as well. And these pockets are still looking attractive. Like for an Ashok Leyland, I still believe there's money making opportunity here. If somebody looks at buying at current levels, also you can see a decent upside to 210 levels on the upside. Eicher Motors too, despite the fact stock has been continuously making higher highs, still has another 5 to 6% upside left from current levels. I'm looking at a target of 4,700 or 4,800 on Eicher Motors as well. And same holds true for Mahindra and Mahindra. I think that too can continue to outperform from here on. And at current levels, if you're looking at a fresh entry, maybe a 2,300 is what I'm looking on at Mahindra Mahindra.
Well, what a move from Mahindra and Mahindra, 4.8% higher. But while we're at it, I want to also mark the breadth of the market. Let's quickly look at the advance decline. And of course, we started the day strongly in favor of the advances, but that has slowly tapered. We've not gone negative, or we've not gone towards the decline. So that's the positive from all of this. So we stayed with the green. But I think the small and the mid cap is where the slight bit of ratio seems to be skewed when it comes to where the markets are concerned, especially on the small cap side of things, more towards 1:1. Let me quickly mark out some stocks which are buzzing on the back of numbers. First off, we had Gillette come out with its numbers, 9.5% higher on that one, 6% up for Vesuvius. Very, very strong margin uptick that we're seeing. We're seeing that reaction on the stock. KFin Tech doing very well as well, 6% higher. Canfin Homes is the other one, up around 2.7 odd percent. In numbers and within the positive basket, we are looking at an REC, declared numbers just a few, maybe a half an hour or so back, up 8.7%. Very, very strong up move that we've seen in REC. Honestly, numbers not a big surprise, but we saw 733 odd crore reversal on the provision side of things, which is what has led to a strong profit surge. From 3,000 crore, in fact, the profit has gone up above the 4,000 crore mark. That's probably why we're seeing the reaction on that stock. Look at something like a Newgen Software, up 7.2 odd percent. As we speak, that too showing some very robust margin improvement. Exide Industries, same story, 4% plus higher, and PNG Health, margins above 20%, very, very strong. Symphony too, as well as Star Health, both of which are gaining 2 to 3% odd in trade. Among the losers with regard to numbers itself, let's pull up something like a Rosari Biotech, a Birla Soft, a Tata Chemicals, all of which are down anything between 2.5 to 3.5%. Those are some of the stocks on the back of numbers itself. Outside of numbers, I want to try and pull up something like a KEC International, a PC Jewelers. PC Jewelers, SBI settling 2.5% higher, definitely a positive for the stock. KEC International, 2 order wins, 2.5% higher on that one as well. So those are some of the others. Grasim, otherwise, outside that basket, Grasim, look at what it is doing, 1.5 odd percent. There you go, 1.4% higher. Greaves Cotton also around 4.5 odd percent higher, new product launch. And J&K India, what a debut for that one, 67% higher for J&K India on the first day. So clearly, IPO shareholders benefiting from that. But Aditya, your picks.
Harsh, I've got a couple of buy recommendations, and kudos to you for non-stop addressing the number of shares which are outperforming. That's a long list, I must say. So I've got first Petronet on my radar. It's looking strong on the charts after taking support at 61.8%. It's moving higher again. One can look at fresh entry in the stock for a target of 340 with a stop loss at 300 on the downside. The second stock is Karur Vyasa Bank from the banking space. Looks very strong as we speak. Maybe it's trading at day highs. Yes, at 208, it makes a fresh entry at current levels as well for a target of 220, 225 on the upside with a stop loss at 196. This is a good positional trade as well. I believe one should definitely take and carry over for at least a couple of weeks.
Couple of weeks. Okay, Aditya, thanks for that. So watch out. Banking certainly is strong, but I must say auto has taken our breath away, particularly Mahindra and Mahindra, which is, to our mind, the stock of the day. The company dropped its new launch to capture a segment that has so far remained out of its grasp. Tushar and Puneet join in with the key details of why this launch is important for M&M. Keep in mind, the other big trigger for Mahindra and Mahindra over the next 2 days would be its results and the monthly sales numbers as well. So lots happening there. There are brokerage notes too. But guys, take it away. Why is this launch so important? Help us understand this.
So, Niraj, if you see what we have called it the disruptor, and that's how Mahindra is pegging the 3XO as. So, remember, this is essentially a refresh of the XUV 300, and now it has been named as 3XO. So, if you just extend that nomenclature a bit to say, as far as product, pricing, and positioning of this particular SUV is concerned. So, as you see on the graphic here, the compact SUV market in India in FY24 was a 25 lakh unit space, of which about 50%, that's 12.5, was subcompact SUVs, and that's where Mahindra was not present essentially. Remember, both Maruti Suzuki as well as Tata both have the Brezza and the Fronx, and Tata Motors the Punch and the Nexon in that space. Mahindra had, so to speak, a half-baked product in the XUV 300 so far. As far as the crowd, it's actually essentially a very crowded space, this particular thing. So if you just see the next graphic. So we have the companies that are coming, the products that are coming in is what are you expecting? That there's 6 airbags, discs all around. Okay, fine. So we have. So in the last 1 year, this is the sales chart, how it looks like. The Mahindra XUV 300, which is the outgoing model, sold 59,000 units as compared to the Brezza, which was sitting very pretty at 1.70 lakh units, and even the Tata Nexon at 1.70 lakh units. So essentially, again, best sellers in the space. But remember how Mahindra has priced the 3XO now. It's at 7.49 lakh rupees to 15.49 lakh rupees. And it's packed the car to the gills, so to speak. So you have 6 airbags, that's standard, discs all around on 17-inch wheels, that's again a segment first. The car also gets a panoramic sunroof, again a segment first. The base variant is actually 60,000 rupees cheaper than the comparative Nexon and the Brezza. The mid variant, which is at 10.5 lakh units, which is estimated to be the best-selling model, is also a lakh cheaper than the corresponding Nexa and Brezza. The company has actually taken a gamble and launched an automatic variant under 10 lakh rupees. That has also not happened in the sector. So as far as positioning and pricing is concerned, it's literally hit the ball out of the park, so to speak. So essentially, what Mahindra is now doing is playing the volume game rather than the revenue game. So far, Mahindra has claimed that it is, and it is correct, that it is actually the #1 SUV maker in India as far as revenue is concerned. But now it wants to get into the volumes game. Remember, compact SUVs actually account for 50% of the SUV market in India. It's actually in the second sweet spot, so to speak, in the 10 to 15 lakh price bracket. Again, the biggest space that we're talking about. It has also a little bit about the analysts. It's expected to double the volumes, and Puneet will tell us more about what analysts are saying.
Yeah, thanks for that. So, just looking at quantifying what Tushar just said, starting with how the models will be looking at. If you can get the first graphic up across models, if we look at it, how has the company positioned itself on efficiency? Now, India, very, very fuel efficient market. the micro SUV market from 4 to 7 lakh, extending it to 10 lakhs, shows that the company is positioned well ahead of the SUV, micro SUV market. So it will be challenging the market of micro SUVs as well, which come between 4 to 7 lakhs. As you can see, coming in at 20.1 mileage per kilometer, much higher than what the models of Tata like Altroz as well as Tiago, which is sub 7.5, but available in that same price range. So the entry level price model is very, very key here for Mahindra. If you look at the other leading models in this segment and move on, we'll see that over, like as Tushar said, for Brezza, for Punch, for Nexon, what has it been? Now the monthly sales volume are across like roughly from 10 to 14,000, but look at the 12-month volumes. It's upward of 1.5 lakh in this particular segment. Nexon being the leader, but Brezza as well as the Punch not far behind. Do know that the Tata Punch is also available in an EV option right now. Mahindra has a model already there in Bolero, but it is a very different segment which it caters to. It sells roughly around 9 to 10,000 units on an average monthly basis and has a 9% market share. So this product positioning is very key, as Tushar said. And finally, what are the brokers saying? Nomura has of course come up with a report today. Although it's maintaining its target price as well as it's a price target of roughly 2,143, which is just around 1 to 2% of its upside. What it's saying is key here, that the production can be ramped up from the 9,000 that the company has given all the way to 15,000 per month. That is a major upgrade to what the company has been saying. The company sells roughly 68,000 odd vehicles per month. Out of that, the PVs will be roughly 50,000. So this is key here. This segment, as Tushar highlighted, sells 6 lakh vehicles. Even if the company is able to garner roughly 10 to 15% market share as the other players, it will have an instrumental sales of roughly 6 to 8,000 per month. It can increase the total sales also, as mentioned here, and it is also priced at roughly 50,000 and 23,000 lower than the XUV 300, which was previously for the petrol and diesel. It is targeting a number 2 market share. Currently, it's at number 5 in this segment. But finally, to end this, basically, the current levels are at 10.5 times EV to EBITDA on valuation, while the other players trade at 15 times EV by EBITDA. And the sales estimate for this year for Mahindra is roughly 4,88,000. Increasing it to 5,71,000 in FY26. So overall, really strong model launch. Positioning is key. Let's see how we go forward. We will be covering the April numbers also in the closing segment as well. Back to you, Niraj.
Okay, cover the April numbers. More importantly, remember M&M comes out with quarterly numbers tomorrow, if I'm not wrong, and that could be important as well. Unless I'm wrong, they come out with numbers tomorrow. But very well covered, Tushar as well as Puneet. Thanks for that. Before we take that break, you gave a call on M&M, Aditya. I know that, but is it a good buy at these levels?
Oh, definitely, Niraj. I think it's still a good buy. Look at the way the market stock has shot up on volumes today. That clearly tells that there is a good amount of buying in the stock. And it's almost on the verge of breaking out from a resistance, trendline resistance above 2170. It will be a clear breakout from a trendline resistance. And I'm looking at a target of 2250 to about 2300 on the stock. There is no... if I look at the indicators as well, they're not suggesting any overbought structure yet on the stock. So I still believe there is decent upside left in the stock with the stop loss closer to about 2120. You should definitely look at a target 2250 to about 2300.
There's some flashes on your screen before we take that break. Care Ratings has come out with their ratings of Adani Port. They have assigned AAA rating with a stable outlook for long-term bank facilities. Small positive. IOC numbers were sketchy. The stock down post the margins. Picture looking very, very wobbly. 4% lower for IOC in the session. Quick break. We'll be back with more. Stay tuned.
Welcome back. You're watching India Market Close on NDTV Profit. Now, I want to quickly bring on board Mr. Rupesh Shah, who is the MD of Corporate Affairs at Symphony. Let's pull up the stock as well, because when you're looking at broadly the numbers, looking at roughly 7.5 to 8% growth, your margins have expanded by around 10 basis points on a year-on-year basis, but sequentially largely flat, 18% odd margin, which was clocked in Q3. Profits have tripled post the margin uptick that we've seen. And Mr. Shah, welcome to NDTV Profit. It's good having you here.
Yeah, thank you.
So, sir, give us some perspective on Q4 and what are the kind of numbers that you've posted, and what's led to the margin uptick that we've seen of around 10 basis points or so. Some raw material pressure is now off. So talk to us about some of those factors and the sustainability of those.
Thank you. So on a standalone basis, Symphony India, this has been highest ever March quarter sales, despite some of the orders what we received in last few days, we could not execute. Secondly, there has been a decent improvement in EBITDA margin percentage on account of variety of initiatives which we have taken. That is as far as Symphony India is concerned. Year as a whole, and particularly in quarter 4, even subsidiaries have done much better, particularly IMCO Mexico, GSK China and Brazil. As far as climate technology is concerned, it is showing really positive tailwinds, especially some of the initiatives as already executed are reflected in much reduced losses, including decent improvement in GP and EBITDA margin percentage in climate technology, and we expect this to continue.
Mr. Shah, there's a lot of talk of how this very hot summer would lead to extremely high sales in April to June quarter. Some of the air conditioning companies have spoken constructively of that. Do you reckon April to June could be a strong start to FY25?
Absolutely. So we are also witnessing the tailwinds. There has been a strong summer, strong demand, and terrific pickup.
Could you qualify that?
No, so it has been a great summer leading to a great demand, and in some of the models there has been a stock out, and still 2 months to go during this summer.
So in some sense, both on the volume, maybe even on the pricing, quarter 1 could actually turn out to be a really strong quarter for you as well. Is that's effectively you're saying, both on volume and pricing, right?
That's right.
Right, sir. And so just with regard to how margins should shape up in the medium to longer term, I know some bit of seasonality for sure, but could you help us understand this a little bit further? So demand strength will lead to more robust margins in Q1 as well as therefore impact margins in FY25. Is that how one can look at it?
Yeah, so obviously once scale and size improves, that is the top line improves, automatically the fixed overheads of CODB don't increase proportionately, and that automatically leads to better and improved EBITDA margin. In addition to that, in subsidiaries, on account of series of initiatives which we have taken, in 2-3 subsidiaries, they are doing extremely well, and climate technology is expected to do much better, again on account of various initiatives.
Sure. Just with regard to the geography from where demand is coming, in your view, because you have a good ear to the ground, what's the sense like with regard to demand? Where is it coming from, and where could it continue to, where is the scope for more demand to come from?
So normally summer sets in early in southern India. So there has been decent summer throughout southern India, eastern India, Maharashtra. starting beginning of March, and still it is continuing. And there are strong tailwinds now in central India and part of western India. Decent summer has set in, and we are witnessing the demand. And in remaining months of the summer, we expect the same to repeat in northern India, which is a huge air cooler market.
Okay, thank you so much, Mr. Shah, for that perspective. Of course, very strong commentary coming for Q1 FY25. Symphony in focus on the back of Q4 numbers. Q1 demand continues to remain strong. Thank you so much for that perspective. Aditya, if I can go to you with regard to not just Symphony, but maybe the whole bunch of plays with regard to air conditioning on the Voltus, the Blue Star and the likes, as well as on the EMS side of things. What's your sense with regard to how some of these names look both on charts as well as in terms of how you are seeing levels?
So Harsh, I believe most of the move is done. The cushion, or I would say the comfort which was there in most of these stocks, be it a Blue Star or a Voltas or a Havells or maybe likes of Symphony as well. The comfort is not there, though there can be further more upside in these stocks, but the risk to reward will be slightly skewed now from current levels. So I would wait it out for some kind of a dip, maybe then look at aggressively going long on these names. The only stock maybe from this entire pack which still hasn't moved and stands out for me is Crompton Greaves. That is one stock maybe that can start to chip in and can play a catch up from current levels. Of late, if you notice, the stock has been continuously inching higher, making higher rise, higher low. So I believe at current levels, one can definitely look at adding this stock in the portfolio from within the space and look for a target of at least 345 to 365 on the upside, with a good support on the downside closer to about 310.
Okay, so those are some names for you in this space, but of course not completely bullish on this one. Time to slip into a very, very short break. On the other side, we'll get you a preview into auto sales numbers. Of course, auto sales for April will come out on Thursday. Will start to trickle through, and what can one expect from that? So stay tuned to NDTV Profit.
Okay, back with India Market Close right here on NDTV Profit. Some solid show out there by a few stocks, even as the indices have cooled off a little bit. I wonder if just pull up the bank Nifty and just intraday. There has been a plunge of sorts that has come into the bank Nifty. It was up 1% when we started the show. It's just this remarkable pullback in the last 30 minutes on the bank Nifty. So quite stunning really what's happened here. Actually, just before we get to Sudeep Bandyopadhyay, Aditya, come in here. The banks in particular, a quick turnaround that has happened really. What do you do if you had long positions? Would you stay long, or would you, if the stop losses were not put in, would you square the positions?
Niraj, I would keep a stop close to about 49,400 on the bank Nifty. That's the immediate support. That is where from yesterday it did give a pullback as well. If that is taken out, I would not want to carry long positions because again, tomorrow is the trading holidays. We don't know how global markets will pan out in a couple of trading sessions. If we see a gap down, then that can eat away into your profit. So keep a stop close to about 49,400. And like I mentioned, I would not like to trade the index because of the kind of move that they've already shown in the past few trading sessions. I would like to stay away from getting into fresh long at least on the index at current levels.
Okay. Well, Sudeep Bandyopadhyay Johnson with his thoughts. Sudeep, great having you. Thanks for taking the time out. Good to have you on a day when the markets have hit those life highs as well. And a bunch of stocks, particularly on the financial side, are making their presence felt. Yesterday, today, the likes of REC are up 10% post results. Are you constructive, Sudeep, or are you skeptical now because of the levels that we are at?
No, I'm constructive, Niraj, on the BFSI as a whole. Of course, you have to pick the right stock because everything has moved up quite a bit. But I believe that there is significant momentum left as far as BFSI is concerned. Look, if we believe that the economy is going to grow at about 8%, and we'll have an average inflation of about 5%. So, you're looking at a 13% nominal GDP growth. And if there is a 13% nominal GDP growth, financial BFSI should get into a significantly higher orbit as far as demand is concerned. So the loan growth, which hasn't been, that great for the most of the leading banks, I think that growth will come back. While the cost optimization, deposit mobilization, CASA, and pretty much all the other parameters, asset quality, they have performed very well. The loan growth hasn't been anything to write home about. But I think we will start seeing loan growth loan growth coming back in a big way as far as banks and large NBFCs are concerned. And that should take their financials to a much better level. That's what we believe. Now, this growth depends on private capex picking up, and that private capex depends on consumption demand picking up. And that, I suppose, to an extent, depends on monsoon being good and rural economy and semi-urban economy picking up. I think we are expecting all of that to happen, starting with monsoons being good this year. So I believe in BFSI and selectively buying into BFSI.
Sudeep, somebody this morning was telling us that we should get Sudeep on the screen. Somebody this morning was telling us that the stock to buy in BFSI is IndiTrade. Would you second that? I'm just kidding, Sudeep. Don't worry. I'm just kidding. No. I'm just kidding. Let me ask you, Sudeep, about this power financiers. There is this big jump in profitability that has happened. Harsh tells me there is some bit of a write back also that's come in. But the market is loving to reward PFC, RECs of the world and some of the other non-financial power ancillaries as well. What are your thoughts here?
Well, there is too much of excitement. Look at IREDA. I think because that is renewable, that had gone into a different level. Performance has been very good as far as REC is concerned, PFC is concerned. And, at some point of time, a couple of months back, they were languishing. They have moved up quite a bit. And at current levels, I think I'll be a little skeptical. I don't think I will jump to buy these stocks at current levels. They have moved up quite a bit in the just very, very recent, maybe a lot of it today also. So it's better to wait and watch. I'm not doubting the fundamentals or I'm not doubting the business potential, but the valuation has reached a level where I think I would prefer to pause.
Okay, thanks for that, Sudeep. Aditya, I want you to chime in because when you're looking at HDFC Bank and when Niraj was starting this show, HDFC Bank was up around 0.5% or thereabouts. We are now sitting 0.5% lower on HDFC Bank, and that's probably what is pulling both. See that sharp fall in HDFC Bank, that's probably what's pulling, and we're at the day's low there. That's probably what's pulling the Nifty Bank as well as the Nifty 50 lower, especially the Nifty Bank, around 200 odd points shaved off as a result of only this one counter of the Nifty Bank. So what's your sense on this one? The sharp fall, what do you make of it, and what should one do if one is a trader at this point?
So both HDFC Bank and ICICI Bank both have corrected from the top as we speak. HDFC Bank, if we talk specifically of, it is facing resistance at the 200 DMA. If you look at even post numbers, the up move halted at the 200 DMA, which is currently at 1540 to a 1550 odd level. So that is the zone where the stock will continue to face resistance. Until the time this resistance of 1550 is taken out decisively, I'm not looking at going aggressive long on HDFC. Clearly, take a look at the way stock has moved in last two trading sessions. Bank Nifty has scaled past new highs, but HDFC hasn't even participated a bit. So this is a bit of a worry till the time it crosses those resistances of major hurdles of 1550, 1540 on the upside. I'm not looking at a fresh entry in HDFC Bank. It could take some time before it starts its up move. And I'm not expecting a big correction as well here, Harsh, because clearly it's entered into a consolidation phase. But yes, given that the rest of the stocks, be it Axis or an ICICI, which are the major banks now, could see a bit of profit booking, which can drive the Bank Nifty slightly lower, maybe in trade today or next trading session.
Okay. Well, so the markets have come off, but a lot of stocks active. One of them is Trent, of course. It rose on the back of a strong quarter four. Mahima Johnson with an idea of the breakdown of the numbers, but more importantly, what our brokerage is saying. Mahima.
Right. So I'll start with how the numbers have been. Strong set of numbers. Revenues up around 51%. Net profits have been up 16 times. But this is because of a one-off adjustments in the releases that they've taken place. It's a one-off adjustment where 543 crores of lease gains has been recorded versus a tax of 138 crore. Now, in terms of margin expansions, their margins have improved significantly from 9.3 to around 14% roughly, and they've witnessed a growth of around 10% like for like. So overall good set of numbers. Now in terms of what the brokerages are making out from the Trent results, well, it's a mixed street view. I'll start with Nuvama, which is extremely bullish on Trent with a target price of 4926 with an upside potential of 14%. But what they've said is that they still await clarity on the lease liability adjustments that the company have made and believes it could be related to the franchising business. Now Jefferies on Trent, they've rated it whole with a target price of 4150. What they're saying is that strong performance quite like Tata Group, but the disclosures are quite unlike. So they're also waiting, commentary on the lease adjustments. Lastly, we have MS on Trent, which rates it equal with a target price of 3675, which is lowest amongst the three brokerages. And what they've said is that Q4 beat on top line and margins. Beat was led by better than expected fashion top line margins. However, what they're saying is that uncharted execution on growth and profitability in FY24 increases conviction in growth and sustainability. So this is the overall view of Trent Q4 results and why the street is reacting on the stock.
Thanks, Mahima, for that. But Sudeep, let me come to you on this one. Strong set, no doubt about that. My limited question is from a perspective of valuations. Despite the strong set, do you still feel that there is value? Because when I'm seeing what most brokerages have done, they've upgraded their target prices, but their target prices still remain largely in the range in which the stock is trading at.
I can fully understand why that has been done. I think Trent is trading at a valuation where I think pretty much all the positives possible have been factored in. So under the circumstances, there is very little scope for a further, giving a, significantly higher value from current levels. And that's my view. I think, it's a fantastic set of numbers. The company has been doing exceedingly well. Zudio has really been a winner. And, other stuff which they're doing also is good. And they have clearly been a winner as far as this entire retail, mid-market retail is concerned. But at current valuation, I am a little bit skeptical, and I don't think I will try to take it. But yes, maybe 5% of, or 10% upside may be there at some point of time. But I think it's too risky to venture into this at current levels. I would rather go and take a bet on Aditya Birla Fashion. Pretty much everything went wrong there, and they were definitely a laggard vis-a-vis trend. But they have the ingredients, and I think focus is back there now. So, if I'm a bit of an aggressive investor, probably I'll go and bet on ABFL and wait for a year. They are trying to do things right. And as I said, ingredients are there. So I'll wait and watch and see what happens in Aditya Birla Fashions.
Clearly, two stories playing out there, Sudeep. One is Aditya Birla Fashion, the other is Trent. Aditya, your views with regard to either of these and both of these, in fact?
I would second that thought. In fact, I would not be venturing into a trend at current levels. If on the flip side, I would recommend if you hold the stock, maybe place tight stop losses, because I think stock can see a bit of a correction from current levels. The way the 2 days candlesticks have formed on huge volumes, I wouldn't be surprised if smart money could be selling the stock. And even if you look at the brokerage's target, which is close to about 4,100, which is 6.5% lower from here, Harsh. So why would I want to get into the stock at current levels? In fact, I would like to get into Aditya Birla Fashion Retail, which I also like. Stock has shown decent upside, has shown performance in the recently on good volumes, and I believe stock can easily test levels of 330, 340 on the upside. This is one stock which we also like, and as a disclaimer, is some recommended to our clients as well. On the downside, it has decent support close to about 250. So with a stop at 250, if the stock is showing me a potential of 320 on the upside, I would like to bet on Aditya Birla Fashion Retail rather than betting on a trend at current levels.
Okay, Niraj, just from a perspective that when I was speaking with a few fellow friends, investors, largely the consensus seems to be that every time you want to enter trend, it's expensive, and it always doubles up from there, from the point where you find expensive. So it's
but it depends, right? For until DMart or Avenue Supermart started consolidating, nobody thought it can consolidate. Always the belief was that it will keep on going one way up. At some point of time, these valuations can course correct. The only thing is, like one of the notes was saying, that they're talking about nearly doubling their profits in a matter of 2.5 years. And therefore, that 150 times valuations becomes still 75 times, but a lot more reasonable than what it's currently looking at. So, but yeah, the point well noted, Harsh. I mean, it's just amazing what Trent has done.
So
a remarkable story.
Probably let's also switch focus on, actually I want to switch back to the auto counters. And before we go, and before Puneet mics up with regard to previews, I want to quickly mark out Exide Industries. Roughly 13.5% growth on the top line, but look at margins. EBITDA up 21% year over year. Margins up roughly 62 bips or thereabouts. Profits largely flat, 2.5%, but just that margin number and the kind of uptick we've seen, and the fact that it owns roughly 4% of HDFC Life. Sudeep, any value, any view on this one?
I think stellar performance, and what I took away from the entire thing is a strong management commentary, and the debt levels have disappeared. I mean, it's a zero debt company now. So on top of whatever you say, these are the two additional positives. Yes, that because they sold their life insurance business to HDFC Life, they continue to hold that HDFC Life shareholding, which is an incremental value in sum of parts valuation. But I think the main story here is the EV, because now the automobile manufacturing in an EV era will be more battery centric. I think battery is going to be the key factor in an automobile. So Exide, I'm sure, and as is gearing up to play that role. The tie-ups recently they announced is a step in that direction. So yes, I think good times for the company. Valuation is already at an elevated level, but even now, from a long-term investor's point of view, it's not a bad buy, and provided they have 1 year plus kind of time horizon in mind.
Okay, a 1 year plus time horizon, still a buy for Sudeep. And if we can pull up maybe the 24-month kind of chart for this one, you'll see the bottom at like 140. From there, it's been like 3.5 bagger. So clearly doing really well for itself in terms of the way in which returns have come across. But, let's talk about two-wheelers, passenger cars, as well as the overall auto space, because we're going to expect April numbers to come through. Puneet is here to break down what we can expect. Puneet, over to you.
Thanks for that. So after a really, really blistering month of March, we're just going to take it a little easy in the month of April. Reporting numbers growth-wise, yes, but we are expecting a lot of model launches coming in May and June. So this particular month of April has seen sales taper down just a bit compared to the previous month, but expecting decent growth from certain players. So when you look at the two-wheeler makers, we'll see that on a year-on-year basis, yes, specifically for Bajaj Auto, we are expecting an 8% growth. The growth was much, much higher in March, but this is decent level of growth expected. We're expecting the Chetak as well as the other models like the Bajaj 125 doing well in this month as well. Do note that in the first week of May, we are expecting the Bajaj Pulsar 400cc launch in the first week. Will be very, very exciting to see a Bajaj in that particular segment. But for this particular month, we are seeing good sales. Month on month will be a little down, but compared to last year, the sales have been really well. Moving on to TVS Motor, now it's continuing its momentum from the previous year, up 16% on a year-on-year basis. This is only one such, on month also is doing well. It's varied models across the radio and have been doing really, really well, and that's showing in the numbers as well. For Hero MotoCorp, it's going to be a subdued, on a month-on-month basis. Year-on-year will show a lot of growth this time, up 23% compared to the previous year. While for Eicher, we are seeing a mid-single-digit to high-single-digit growth, 8% on a year-on-year basis, while on a month-on-month, we are seeing 5%. For the four-wheeler makers, it's a very interesting preview that is giving, all growing roughly in the 4 to 10% range. Specifically for Mahindra and Mahindra, as well as for Maruti, we are seeing roughly 4 to 8% of growth. While for Maruti is the highest among all the three PV makers, coming in at 9%. While for Tata Motors, it is expected to be roughly in the 5 to 6% range. For CV makers, year compared to the previous month is going to be a hammering, down 40%, but we've seen that March is always the highest selling month in the financial year. So the correct metric would be to look at the year-on-year figures. It will be largely flat, with Eicher as well as Ashok Leyland showing roughly 0.3 to 0.9%, while for Eicher we are seeing a degrowth in a year-on-year basis as per estimates, while Tata Motors CV will be the only one showing the highest growth of roughly 2 to 3%. And finally on tractors, they are continuing their the weak run that we saw last year in this month as well. Do note it's an election year. Brokerages estimate that only the second half of this financial year will be a key growth metric. For escorts, we are estimating a 12% month-on-month fall. But again, the momentum has not been on the tractors side. And finally on M&M, this is surprising because for escorts, we saw a fall on a month-on-month. Here we are seeing a rise of 33% compared to the previous month. But on a year-on-year basis, things do remain subdued. So overall on the auto pack, in general, certain segments and certain companies like TVS, like Mahindra on month-on-month are doing well, but expecting a decent to flat set of growth numbers for all the automakers. Back to you.
Thanks for that, Puneet. Well, watch out for the numbers starting to trickling tomorrow. We'll, of course, react to some of them or most of them. Only naturally so on Thursday, but some of them might come out during the Thursday market hours as well. So, Deep, we of course discussed M&M way before you came as well, but this auto pack is revving up in some sense despite expectations of a flattish dispatch number. What do you like and why, or what would you watch out for and why within this auto pack?
M&M is definitely an interesting thing with the kind of compact SUV launch which they have done. But more than that, I think I'm excited on the tractor segment, and I believe that with a good monsoon, I think that is one segment which will see a lot of excitement. So M&M definitely is a counter which I'll keep watching, and I like that company. On the two-wheeler front, I think Bajaj Auto has been my favorite for some time, and I'll continue to focus on that. I think they have picked up a very nice niche segment, which is not the top end, which is not the absolutely bottom end, somewhere in the middle, and that's where they have been growing. continuously. The other thing which they have been doing for quite some time and successfully is the exports, but they had a lot of challenges in between. But I think things are improving as far as exports are concerned, and that will add incremental muscle to Bajaj Auto. So yeah, if somebody is looking at like slightly longer time horizon, I think both Bajaj and Mahindra from the two-wheeler and four-wheeler can be definitely bought. I'm not saying there are challenges, major challenges in some of the other companies, but these two are my favorite. The other company which I definitely keep watching is Ashok Leyland. It's not a two-wheeler, four-wheeler company. It's predominantly on the commercial vehicle space, but this is one company which also, with its export business picking up on the bus side, this is one company which I think going forward, will show a lot of promise. So this is one other counter I'll be watching.
Okay, Sudeep, thank you for that really comprehensive auto coverage that we've brought for you. But let me first off try and ask Aditya for his BTST or STBT ideas. It's actually buy today, sell Thursday.
Yes, Harsh, it's a buy today, sell Thursday. Unfortunately, I can't spot anything interesting on the chart setup yet, which is compelling enough to give a BTST or maybe buy today, sell on Thursday. So I'll avoid at the moment. Let me see if I find anything in next 2-3 minutes. I'll give you an update on the same.
We'll come back to you on that. Sudeep, your picks in this market?
You're talking about auto?
Any sector, any segment you feel your possibly top pick from even a medium to long term perspective?
Well, my long term pick continues to remain Larsen. I think a lot of good things are happening as far as Larsen is concerned. There is a significant tailwind. The margin profile of the company is changing, with 1/3 of the order now coming from international markets. They have become one of the leading players in Saudi Arabia, where there is a lot of construction and infrastructure work is going on. Of course, India, they continue to be the leader. Hydrocarbon segment, which was languishing earlier, has picked up in a big way in West Asia. Overall, they have improved their working capital management by getting out of unrelated businesses. So this stock, while it has moved up quite a bit from its earlier levels, but I strongly believe that there is still significant upward potential left in the stock, and a 1 year and buy and 1 year hold will be the right strategy here.
Okay. Watch out for some of these. Jubilant FoodWorks is very, very active today on volumes. You don't usually see this, but both on price and volume action. Some serious stuff, even as the Nifty, maybe because of this financial expiry, has come off. Any thoughts here, Aditya, on Jubilant Food?
Up move, no doubt about that, and backed by volume, as you mentioned. But today's the first day of the move, Niraj, so I will watch it closely for sure, and keep an eye on how the stock behaves on Thursday, because that will be important. 470 on the upside is an immediate hurdle for the stock. We're almost there. In fact, I guess it does almost 470 in trade today. If it sustains beyond 470, then I don't have any doubt that the stock will head higher, closer to about 510 odd levels. So maybe I'll be a buyer above 470 odd levels with the stock close to about 455. And look for a target of 500 to 510, because today is the first day of this kind of an up move. I would like to have a follow through up move in the stock maybe on a Thursday, then I would be more interested.
Okay, watch out for Jubilant FoodWorks. I'm just trying to think of what else has moved on volumes. Of course, REC has. There is a fair bit of auto sprinkling non-majors as well. JK Tyre is up about 3%. There is strength in Greaves Cotton, if you call it as one of those as well. So that one has had a smart move in trade today. There is Balkrishna, which is higher in trade. Tire companies seem to be doing okay. Sudeep, any thoughts here on tire stocks?
Generally, with the excitement in the auto and the replacement market, I think the tire companies will continue to do well. But I'm real skeptical about this off-road tire companies like Balakrishna and all. I think they had a lot of challenges in the US market in the recent past, and I think those will continue for some more time. So I'll be a little careful as far as this off-road tire companies. But the regular tire manufacturers, I think the transition from IC to EV doesn't affect them, and they will continue to enjoy the boom in auto sales, which we are witnessing at present. So I think that is one positive factor. The second is the rubber prices have stabilized, I would say. It's cooled down and stabilized at a level which is helping them improve the margins. So overall, I think we are positive on tire, but at this stage, we are not really recommending any buy.
Sure, Sudeep, I want to stay with you, especially with regard to some of these power financiers. We have some commentary also coming in from REC as we speak. Government planning strong expansion with regard to coal-based power plants, and the cost of setting up some of these thermal plants has risen. Do you believe that the growth opportunity for REC PFC, some bit of tepidness in Q3 in terms of their commentary for growth, do you think that they can still continue to grow at a 15 to 20% kind of clip? And I know that you're not too much in favor of valuations within this pocket, but just from a perspective of, say, an existing investor in REC or PFC, what should one do?
They can grow. I think, look at this scenario. India is a power-hungry country. The electrification is almost total now. With that, the demand for power has increased significantly. And with, the more and more penetration of modern electronic devices, the power demand is only going to increase. That's the reason we have seen a significant revival in traditional energy. At one point of time, we are talking about transition to green energy. Now everybody is talking about growing both, traditional as well as green energy. And under these circumstances, there is a significant financing demand for setting up these new facilities over the next 5 to 10 years. And banks cannot meet these requirements, and banks are not expected to meet these requirements. So the financing for this incremental power demand, for setting up facilities to meet this incremental power demand has to necessarily come from power financiers. And under the circumstances, these leading power financiers will definitely have a robust demand pipeline. And we believe that they will continue to do well. Now, whether the valuation is full or not is a different question altogether.
Okay, thank you so much, Sudeep. Aditya, completely out of time for this one. Thank you for joining us and giving us all of that perspective. We're very, very close to market close. It's a truncated week, no trade tomorrow. So let's quickly pull up where the Nifty 50 is closing in at. It's been kind of a volatile day where we've seen the Nifty fluctuate by quite a bit, but we're settling in above the 22,550 kind of mark, 0.25% lower on the Nifty 50. The Nifty Bank, if we can pull that up, is down around 1/3% or thereabouts. So we're off the lows, but well off the highs where the Nifty Bank is concerned as well. Let's pull up the heat map, see what's where some of those 50 stocks are closing in at. M&M, of course, at the top of that pile, 4.5% higher. But most of those holding on to those gains. Look at Power Grid, was roughly 3%, continues to remain in that band. Shriram Finance up 2.1%. The numbers as well as the commentary remaining strong. But let's look at some of the banks. IndusInd, Axis still doing fairly well in trade. Let's look at the bottom rung, Tech Mahindra, Dr. Reddy's, Sun Pharma. So some pain in pharma, IT. That's where all the pain seems to be at. L&T down 1%. Let's look at Kotak as well as where an HDFC Bank is closing in at, around 1% lower. That's where the pain has gotten worse where the Nifty 50 is concerned. We have closed for the day. Let's pull up the Nifty Bank and its constituents. And we'll try and get a better picture of what's happened with the Nifty Bank. There you go, all the PSU banks doing well, then the smaller size banks outside of IndusInd and Axis. But look at the large ones, ICICI, SBI, HDFC, Kotak, within the top 5 losers on the Nifty Bank. That's where the drag of 150 odd points has come from. We were at 49,970 before that pullback happened. Aditya very correctly pointed out that the resistance is at 50,000. That's exactly how it's played out. And really that's been the drag. Let's pull up the sectoral charts. and see where the pain is. 1.9% on the auto, that's a clear positive. Realty also doing very, very well. The pain in media, IT, metal as well. 1% plus lower on the media and IT index. Metals also down roughly 1% or thereabouts. That's where it's been. Mid cap and small cap, but before that, the advanced decline. Let's quickly see where we've closed at in terms of the advanced decline, because we started off strong, but we've closed at a reversal. That's where we've seen now the declines, in fact, above the advances in terms of the number. And let's pull up the Nifty mid cap and small cap. The Nifty mid cap hit a life high, but stayed in the green, so no complaints there, around 0.25% higher or thereabouts. The Nifty small cap up just about 0.1% or so. Let's pull up the BSE 500 top gainers, losers to quickly close things this Tuesday afternoon. REC, the top gainer on the BSE 500, 10% up, very strong numbers. Hitachi Energy, JM Financial up 9 odd percent. Gillette settling in 7.5% higher, again very strong set of numbers. Eureka, Forbes, Spark are the two top drags. Motilal Oswal a slight bit of correction after a very, very strong set of numbers that we saw at the back end of last week. Indian Oil again on the back of numbers, and we are also seeing some other losers in terms of AstraZeneca and Birlasoft also on the back of numbers. With that, completely out of time on this edition of India Market Close. From Niraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.